Hi there, everyone. It's Ifti from Extreme Returns. Thank you for joining me on an analysis of a company, which we'll come to in a moment. It's called Bilfinger. Quick background. I joined Etoro early last year, 2020, but just had this name of Extreme Returns for a few months. Qualified management accountant. I've worked in the corporate world with big companies like Unilever and Mars. I set up my own business, starting with an estate agency, moving on to a number of other things, most recently car hire. Stats so far are good. We're on the 6th of February, nearly 14% up this year. Reasonable number of copiers and followers. Please do consider subscribing, joining, following, copying. It'll be appreciated. Okay, enough about me. This is Stockopedia. I love this site. I've looked at it in a lot of detail. As an accountant, it saves so much time. I've tried others, but I find Stockopedia by far the best. Market cap of this company is 1 billion. The quality metrics are 53 out of 100, value is 59, and momentum is 68. We'll come on to those in just one moment. Let's have a look at the company itself. They're based in Mannheim, in Germany. Bilfinger, if I've pronounced it correctly, is an international industrial services provider. The company provides customized engineering and services to customers in the process industry. Its industrial business segment includes industrial maintenance, insulation, scaffolding, painting, oil and gas, engineering solutions. Designs and develops industrial facilities, maintenance, repair, project management. So you can imagine a very German company, engineering. They're famous for that, aren't they? All right, let's look at their revenues. This is all in euros. They are listed on the German DAX. Now, they've taken a number of hits here, 6.2 billion euros, down to 5, down to 4.2, down to 4. Then, after those poor years, they've started to recover. Being hit by the pandemic, but looking to bounce back this year. Compound annual growth rate is -7%. Their net profits have been hit even more, and they're making a lot of losses. They had one good year in 2016, but it wasn't from the operating business itself. Maybe they sold off part of their business, one of their divisions, and recouped that money. That would be one question I'd ask. Why is there a profit in 2017? Obviously, the operating margins and return on capital employed will all be negative. Operating cash flow. Now, this is interesting. You can see net profit losses here all the way, except obviously in 2016. But on an operating cash flow basis, they're generating money, which means that they're profitable. They're not going to run out of cash. And here, look at this, 7.02 euros per share operating cash flow. That's good. But in many years, the capex, I suppose 1.4, 1.5, it's stayed fairly static. That's not so bad. Free cash flow basis has been negative for most years, but they're saying that they're going to make money this year. They have been known to give dividends. They stopped in 2015. Now, my question is, if you're losing money here, free cash flow basis, and on a net profit basis, here you can see, why are you paying out a dividend? Don't give out dividends just for the sake of it. I mean, I suppose their share price would get hammered, but that's a short-term thing, I think. They've got 483 million in cash. It's growing very slowly. What else can we tell you about this company? PE ratio is 23.9. On the cash flow basis, it's much better at 5. How does this compare to the German market? Let's have a look. So remember that number, 23.9. So if you look at the DAX, its PE ratio is 20. Even if you look at the all share classic, it's 20. Here it's 25. This is a prime all share. Which tells me that it's not too far off. It's not too far off in terms of the market. Dividend yield is good, 2.3%. Let's look at this balance sheet. How much debt has it got? Well, immediately I can see one thing you should always look at is intangible assets. But that's okay, it's not too bad. 375 here. They had no long-term debt in 2018, then it jumped to 375 after being in the 500s plus for much of the last decade. And they've got capital lease obligations, which are quite high as well. Historically, it's never been this high. So they've taken on a fair amount of debt in 2019. Look at that, 551. It was 10.8 the year before. But then it just comes back to normal levels. Yeah, nothing outstanding there. Cash flow statement. Let's have a look at that. Depreciation numbers are slightly higher here, but they were the same in 2016. Discontinued operations, so they have been either selling off businesses or divisions or shutting them down. Who owns this company? What I like to see is co-founders, individuals who set up the company. But I don't see that. That's a Norwegian sovereign wealth fund, which is interesting. It's the biggest in the world. Maybe China would dispute that, but they're very, very big. This company, Sevian Capital, has got a huge amount. Now, that is one question I would ask. Why does this hedge fund own more than a quarter of this company? Apart from that, let's look at the share price. Pre-pandemic, it was trading at 33, 34. Oh, wow. Even before the pandemic really started to bite, it was declining and it went down all the way to 13. It's recovered. So anybody who bought then, but it hasn't recovered to pre-pandemic levels just yet. It has been getting better in the last month, plus 10% compared to the market. Relative strength over 3 months is good, and 6 months, slightly less than 1 year. I think it will recover. What else can I tell you? Oh, the Z-score is not that great, is it? Now, the Z-score is just a professor. His name is Altman, and he looked at the indicators that show bankruptcy risk. Okay. All right, this is Ifti. That's about as far as I can go on this company. Thank you very much for listening. Do consider subscribing, and also my wife is on Etoro as well. She's under Asian Tigers. Her name's Adiba. She's got some great stats. And we're only into 5 trading days, and she's got 6% up. She looks at companies only in Asia, and I think that's going to be a very good fund. But I'm Extreme Returns. Thank you very much for listening.